All right, this is April 12th, 2021. I thought we should do a video about this Coinbase IPO that everybody's talking about, which, if they've done their research, it's actually called a DPO. We're going to look at the differences between an IPO and a DPO and potentially what Coinbase has got going for them on a DPO. There's been several DPOs done in the past. Spotify has been a DPO. What was the other one? It doesn't matter. It has to do with the amount of money they've already made and how much they need to borrow, basically, to pull this public offering. Like, we gotta get the public to start financing this. So let's go through it. The DPO, if you were, for Coinbase is going to happen in April on the 14th, so in 2 days. So we should see a little bit of activity about this. But an IPO, this is just from Investopedia. So the initial public offering listing are two methods. IPO, and choose a direct listing in which no shares are created and only existing outstanding shares are sold with no underwriters, and that's the point. The underwriters means they don't need any banks, they don't need any money, they don't need anybody to help them finance. They have their own money, they can finance themselves, right? The key takeaways. Company looking to raise, everybody's looking to raise money. Companies that can't afford, don't want to dilute, they are avoiding the lockup periods. That means the other thing with the Coinbase is a lot of these key insiders are going to be able to sell, on the first day. So if this thing runs up hard because of its popularity, which I foresee it might, be prepared that it might have a fairly substantial sell-off as well. And immediately, right? Usually an IPO has a slower sell-off. This one here might have a very quick sell-off. Within a couple days of DPO, depending on how much the insiders really want to get their money back out of it. Coinbase makes a ton of money. I don't foresee people really trying to get out of it really fast. So this is an IPO. It's done with the underwriter, right? The IPO, you guys can read all this stuff, right? They're just, the direct listing process, right, is they want to do a public listing and may not have the resources to pay the underwriters. So I don't believe that's the case in this. And they don't want to dilute the existing shares of the inside, maybe not inside, but the investors that are already there, insiders, I suppose. But initial investors that are in before it becomes public, they could use the DPO version. So the intermediaries, it does not involve underwriters. There's no new shares, and there is no lockup period, right? So the existing investors, promoters, and any employees already holding shares of the company can directly sell their shares to the public. Zero to low cost advantage. Comes with risks. And then it goes, right? So anyway, I just wanted to bring it, Spotify. I just wanted to bring this to everybody's attention when they're looking at these, these guys that call themselves gurus and all this. And they keep calling it an IPO, and realistically, if they had done a little bit of research, that's the long and short of this. It's a direct listing, right? So I just find it interesting that a lot of these guys and girls or whatever they are trying to promote their channels and promote their knowledge base, and they haven't even done the smallest amount of research. If you like this video, you can subscribe, and I will be producing more and more as we go along, and hopefully we'll get the quality down and everything looks great. All right, have a good day.